Thank you, Margaret Ann. So, folks, allow me to introduce Amanda Dunklin and Matt Ball. They joined forces to educate business owners on their unique insurance needs. So, Amanda is a senior manager for Landmark Canada, and she's a disability specialist holding an accident and sickness license. No, she won't make you sick, but she won't get you in an accident, but she'll help you walk you through those parts. So serves a niche group of business owners and tradespeople. She is a top professional in the industry, thrives in educating, and is the hardest, enjoys working with the hardest working Canadians. And she can provide more details on that. Matthew Ball, he's a managing partner of Billiard Insurance Group out in Guelph. I know where that is. Holds a designation of RIBO and LLQP, and a licensed insurance professional for the last 15 years. And folks, Amanda, Matthew, over to you.
Amazing. Thank you, Bernie, and thank you, Margaret, for having us. So as Bernie said, I'm Amanda. I work with Landmark Canada, and we specialize in disability benefits for business owners and tradespeople. Matthew and I met through Facebook and through multiple coffee dates with multiple different agents from their respective industries. I had reached out trying to build a network of like-minded agents within different walks of the industry. So similarly, with any sort of licensed profession, there's specialists within each realm. And I was very grateful to stumble upon Matt, who shares in my values of being educators. We understand that there's a stigma towards insurance and there's a stigma towards sales, and we are doing our best to take the approach of education, because business owners are incredible people. You're all very brilliant. You're all, masters of many, and are very capable of learning at least high level the ins and outs of what insurance is, what it does, what makes one different from another. So that way you can make educated decisions for yourself. We are grateful that you're here. We're grateful for the opportunity to speak with you. And I know your network runs quite deep, so I'm hopeful that this is going to reach a lot of people. And at the risk of sounding dramatic, it may very well help save one of your homes or businesses. And, we're talking big tens of thousands of dollars, millions of dollars potentially. That insurance can protect you against, providing you have the right thing in place. And that's what we're going to talk about today. So Matt, is there anything that you would like to add before I share my screen and we get to it?
I don't know how you can really top that, to be perfectly honest here. Like Amanda said, we work together to try to make sure that business owners and people in general are protected, that their income, their business, their livelihood, their family is taken care of, and that's first and foremost our main focus here. And yeah, like I said, I can't really top that. So yeah.
Let's get to it.
Let's get to it.
I'm gonna share my screen, and I will say, so insurance can get a bad rap. You can see a lot of lawyers that specialize in fighting insurance companies, and you see a lot of people throwing fits that the insurance didn't work. And I will say that every insurance policy is going to do exactly what it says it's going to do. It is a legal document. So what our goal is today throughout our presentation is that you get to learn the ins and outs of what those definitions within a policy mean at claim time. So I will start with liability insurance. So as I said, each one of us holds a specific license that we work very hard for. There is a bunch of studying and reading and examinations and background checks, federal and provincial, that each insurance agent has to go through, and we each specialize in a different walk. So liability insurance, I am handing over to Matt, who has the appropriate license to give the rundown on. Mr. Matt, what is it?
All right. So what is liability insurance? As we all know, we need to have liability insurance in order to operate our business, especially if you have a storefront. The city, the municipalities, all require you to have insurance. So liability insurance is essentially coverage that will pay a third party if you're sued. So there's different types of liability insurance that are available, and we will go through some of the common ones that we run into on a standard policy and that people ask about. So you have your commercial general liability. In a nutshell, that's your slip and fall coverage. So if somebody is on your premises, be it your home, if you run a home-based business, or your storefront, if they trip and fall, hurt themselves because of your negligence, and you're sued, that's where that comes into play. You also have your products completed operations that you'll commonly see with your contractor's policy, or if you manufacture or sell a product. What this is this is coverage for any defects in that product sold or manufactured after it's been completed. A good example of that is a deck builder who, after a few years or few seasons, if something happens due to a defect in their manufacturing, somebody gets hurt, sued, that's what covers them. You also have your personal injury and advertising liability. That is damage of a person's character, reputation, or position in the community as a result of libel or slander. And lastly, you have your tenant legal liability. This is damage you may cause to your building which you rent or lease. The other one I'm asked most commonly about is non-owned automobile liability insurance. This is coverage for any vehicle you as a business owner do not own. So vehicles owned by your employee or even your own personal vehicle that's not registered under your business. If you get into an accident and get sued while doing something on behalf of the business, your business has the potential to be liable and included in a lawsuit, and this is where that coverage would come into play. Employer's liability protects the employer from any financial loss if a worker has a job-related injury or illness that's not covered under workers' comp. And professional liability. This helps protect against losses in the event of a lawsuit due to a negligent act, error, or omission as a result of a service provided to a customer. You may ask yourself, why do you need it? As mentioned before, your municipality may require you to have insurance in order to get a business license. It protects you and your business against any lawsuits from customers or clients. And if you're a contractor, you may be required to show proof of insurance in order to bid on a job or work at a specific job site. And it may be required to operate your type of business. So for Amanda and myself, for example, as insurance professionals, we are required to carry errors and omissions in order to hold our respected license. Another common question is cyber liability insurance. So cyber insurance can have many layers of coverage. It's designed to help protect your business against the financial impact that may arise when your system or website is hacked. Coverages included under cyber liability can be privacy regulations, fraud response coverage, forensic and legal services, public relations, extortion, business interruption, data restoration, or ransomware attacks.
Oh, this is me. Very good, Matt. Okay, thank you. So first chunk being the liability portion, which again is the third party paying. So depending on what type of business that you are running, you may need one or a combination of what Matt has outlined there. So hoping that you pulled a couple pieces out to be like, hey, you know, I know Bernie with your spray, you're producing a product. If there's any malfunction in that product, you would want to make sure that you have the manufacturer's liability listed in your policy. That way, if you do get sued, that you're paid. Moving on to the financial protection for business owners. So my license, I'm a specialist in accident and sickness. So in the case of a business owner becoming ill or injured, we provide an ongoing monthly income to meet the financial obligations of the business owner. So that is disability insurance. So this type of insurance is what is built to pay you. So in disability, so another payer to you would be life insurance, which is, of course, is going to go to your beneficiaries listed. We're also going to cover some health benefit information, what makes one different than another, investments, critical illness, another type of disability insurance we're going to touch on. And of course, it's vital to have the right protections in place, not only for you, but for your family and the staff that relies on you. I know how hard business owners work for their income. There's nothing worse than paying for something that you may not even need. And then definitely nothing worse than needing something that you're not paying into. And then you find that out at claim time. So first, let's start with what's the difference of all of them. There's two primary sides to protecting yourself in the disability realm of the things that can go wrong with the human body. The first is accident. So accident, the definition of an accident is external forces tied to a moment. So you crashed, you fell, you cut yourself, something fell on you. There was a moment where something outside of yourself came in, causing you that disability. So there are, within the accident side of things, different types of policies that you can carry. The first and least expensive is hospitalization. So hospitalization is a policy that will pay you in the case of you being confined to a hospital. So if you spend a night in the hospital and you have been admitted to hospital, a hospitalization policy will pay you generally per day that you're in the hospital. A dismemberment policy. So dismemberment would be a loss of sight, a loss of limb, and it's a one-time payout in the case of those things to help you with the purchase of prosthetics or changes that you need to make to your life because of a loss of sight, for example. Income protection. So a lot of people are paying into a hospitalization or a dismemberment program thinking they have income protection. So the primary difference being is that an income protection policy will pay you an ongoing monthly income regardless if you end up in the hospital or not. So that is you guaranteeing yourself a monthly paycheck. Accidental death is often confused with life insurance. I see, sadly, a lot of people posting surprised that, you know, their parent fell ill and passed away, and then the death benefit they thought they would get isn't coming because it's an accidental death. So again, that external force is tied to a moment. An accidental death policy will pay you providing you have passed due to an accident. Business protection. So in our businesses can carry their own policy related to your health. The primary difference between an income protection and a business protection is that you have to submit your business expenses at the end of the month, and then it's a reimbursement program. Whereas the income protection, your paycheck will show up to do with what you need. So some now, especially given COVID hit a lot of our bottom lines, some who need a bigger benefit level but don't have the reported income to be able to support their ask will carry both an income protection and a business protection plan to be able to make ends meet. So sickness. So the second half of what our human body can throw at us is sickness. So the difference of the two, accident again is external forces in. Sickness is anything your body can produce from the inside out over the course of time. So that would be small stuff like flus and colds up to bigger stuff of heart attack, cancer, strokes, wear and tear surgeries, blown discs in your back from wear and tear. All of those things happen over time. That's the primary difference between sickness and accident. Of sickness policies that are available to us here in Canada, hospitalization again, so same deal as accident. A sickness hospitalization will pay out providing you have been admitted to hospital due to a sickness. Income protection, same deal. It's an ongoing monthly income. And then business protection, providing the business owner falls ill, then the business can receive a reimbursement check for expenses incurred while the owner was down. And then critical illness, a lot of people are paying into a critical illness policy thinking that they have income protection. The difference between income protection for sickness versus critical illness is a one-time payout in the case of you being deemed critically ill for one of the outlined sicknesses. So Matt might correct me if I'm wrong because he has access to multiple companies, but I believe the strongest critical illness policy in the country covers like 35 illnesses.
The average one will cover 25 illnesses, is what most of them cover.
Yes. And whereas like income protection, depending on the company you're with, can cover, upwards of 2,000 illnesses that your body can throw at you. Each of them has great value at the time of needed. However, the confusion of come claim time when the policy doesn't quite do what you thought it would do, this is a high touch overview of at least the type. So what sets one policy apart from another? So firstly, benefit term. So I would like to equip you today with the appropriate questions to ask of your policy to know what you have or subsequently don't have proactively before you make a claim. Everybody learns what they have or don't have when they go to make a claim. Let's be proactive about it and learn these things ahead of time so that you can prepare yourself accordingly and potentially make any changes if you feel necessary. So benefit term, simply stated, how long am I paid? So depending on which company you're with, your age, your health, what you have access to, there are some programs that will pay you for 6 months. There are some programs that'll pay you for 12, some for 2 years, some for 5 years, some for the rest of your life until you pass away. Many policies will pay till you're 65. But valid question. I end up going down, how long will my policy pay me for? And do know that, policies exist that go all the way until you pass away and everywhere in between. Benefit amount, how much am I paid? Very valid question. You want to know how much money is going to be on that paycheck when you're down before you make the claim. A primary difference of what we see in Canada is a percentage of loss at the time of claim versus a fixed benefit amount. As business owners, our income is going to fluctuate based on the year and based on the season. So a lot of the group policies that are provided to government workers or large employee base in industry, they will have a percentage of loss at the time of income or at the time of claim, anywhere from 55 to 65%, for example. So in the case of an employee, their income generally from year to year to year stays the same, whereas a business owner doesn't. So it is a stronger option for a business owner to have a fixed benefit amount. So that way, whether you're in your on or your off season, that your expenses are going to be met by that benefit amount you selected as needing and have qualified for. Waiting periods. So waiting periods are a really nasty surprise to those that have them and don't understand what they are. So a waiting period, standard there are 0-day wait policies available in the country. And then there's many policies that have a standard 30, 60, or 90-day waiting period. I want you to think of that time like your deductible. So what a waiting period is it's a chunk of time that you are on your own before you are on the payroll of your insurance company. For example, you end up sustaining an injury and you have a 90-day wait on your program and you're out for 6 months. That first 90 days, you are reliant on savings, credit, or spouse. And then month 4, 5, and 6, you'd be paid. So again, that waiting period you can look at as your deductible, the same way we pay our $500,000 on our car insurance when we make a claim. If you are in a situation where you are reliant on every week's pay and every month's pay, this is where you're going to want to do your due diligence and find a program that has a 0 or a 30-day wait. So that way you can rely on your program paying you for the months needed. Soft tissue limitation. So a very valid question to ask any broker is, how long am I paid in the case of an unprovable injury? Something like a concussion or a sprain or a strain doesn't come up on an MRI or X-ray. So what some companies do to protect themselves against false claims is they limit them to 60, 90, up to 6 months, and then they cut you off whether you're better or not because it is an unprovable injury. There are programs that carry 0 soft tissue limitations. They are few and far between, but it is a very valid question to find out proactively. Concussion is a great one. If I sustain a concussion, how long is my program going to pay me? Guaranteed renewable. So I'm sure you guys have seen the horror stories of people getting canceled by their insurance company. So it is unfortunately a common practice among any companies that are not carrying the term guaranteed renewable. So this term protects clients against being canceled by their insurer. So in the case of you having a bad year where you've made 1, 2, maybe 3 claims, any company that doesn't carry this term will likely kick you out. And good luck finding somebody to cover you after you've had a bad year. So the guaranteed renewable term in a policy means that the company cannot take your coverage away, no matter how many times you use it, up to the term that they have set. So some guaranteed renewable are to 65, some to 70, some for the rest of your life, some so long as you haven't completely retired. But finding out, does this policy carry a guaranteed renewable term? If yes, for how long? And that way there's no surprises and you're not hunting for insurance when you don't want it or you don't want to. Underwriting. So underwriting is an insurance company's assessment of risk of bringing you into the protection. Every insurance company does underwriting, and when they underwrite is what makes the difference at claim time. It's insurance. There's hoops to jump. What I recommend is finding an insurance company that will underwrite you up front rather than at claim time. So it's split across the industry of which practice each company takes. But knowing what you have or don't have at application and answering the million questions up front is a lot nicer than answering them while you're down. So the question of, have I been underwritten? And if not, then come claim time, there's going to be some additional questions to answer. Integration of benefits. So in Canada, we have something called integration. Easiest way to explain it is that if you have more than one company at the table, they are going to converse with one another of who has to pay how much of the claim. Some companies are deemed first payers. So what that means is that they pay in full, no matter who else pays you. So in the case of integration, do not be surprised if you have multiple policies. A lot of people feel that they're doing right to not put all their eggs in one basket. But then what happens when they're paying into integrated benefits is they've now complicated claim time because now we have multiple players at the table that have to talk to one another to figure out who's on the hook for what. You are best to do your due diligence up front and just get one solid policy of each of the areas of insurance. So that way you're not complicating yourself come claim time, because that's ultimately on you. That is on you if you're going to pay multiple companies and cause the fight at claim time. Knowing that you have one solid policy in each walk is a much easier claims process. Who's doctor? So a lot of companies have company provided doctors that they pay to advocate for the client. Some programs will allow you to go to your own doctor. It's completely, up to you what you feel more comfortable with. And then when you ask of your program, do you have company provided doctors? Can I go to my own doctor for the claims and care? The follow-up question to that is, for how long? I will warn you that a short-term claim, so under 2 years, very often you can go to your own doctor, but then come month 25, they are going to want you to go, a lot of programs will ask you to go to their doctor to assess your situation. Honest claims get paid, but I personally am not a fan of company provided doctors. Partial disability. So there are a few programs that are designed specifically for business owners that will offer what's called a partial disability. So the way partial works is allowing you to make a claim without ever missing a whole day of work. I am sure the business owners on this call have gone to work hurt or sick, because if you don't show up, neither does your income. And so some programs will offer you a payment while you're working with that injury because you are still slowed down. A lot of programs in the country will also help you with partial disability when you're coming off of a longer term claim. So if you end up in an accident that knocks you out for more than 6 months, a lot of programs will offer you a small stipend as you return back to work to help ease yourself back into your regular duties and give your body that extra time to heal and acclimatize back into your full-time week. Freezing medical health. So programs will offer one of two things. They're either going to offer to freeze your medical health at application, which means that the company will never see you any differently than the day you apply. The alternative to this is medical updating, which means every time you make a claim, they're going to re-underwrite you. So if you end up having a slip while you're walking your dog and you break your right wrist and you make your claim, and then the companies who do medical updating are going to re-underwrite you, remove that risk, and then give you a new policy. So if you break that wrist again, you're on your own. So it is best for you to ask, is my medical health frozen, or do you do medical updating? Obviously, a frozen medical health is a stronger policy than the alternative. Return of premium guarantee. So many companies will offer a return of premium guarantee. The way that works, it is an added fee. It's not inexpensive. It is a chunk of money. However, when that policy matures, depending on what's outlined, you will receive all of your money back, providing you haven't used it. I will proudly say that our company is the only one in the country that will allow you to still make claims, and then you get all of your money back, less any claims you've made at 65 or after 20 years, whichever is later. So for those that are like, I don't think we'll ever need this. Well, neither did anyone else that's on claim. So throw your return of premium in place. Those checks are super fun to go and issue and deliver, and high five, enjoy your retirement. That's a chunk of money. Definition of occupation. So depending on what company you're with, they're going to have a definition of occupation that is either any occupation, regular occupation, or own occupation. A lot of professionals, like white collar specialists, like surgeons, athletes, they will carry an own occupation. So the way that works is if you, for example, you're a brain surgeon and you sustain an injury to your hand, you're not going to ever be able to be a brain surgeon again. However, you can go and become a professor at the university, but your pay just took a cut. So an own occupation policy will allow you a payout to say that you cannot do that one specific occupation. So it'll help you with that lost income, the variance between the two. Any occupation means that if, and often programs that have an any occupation definition will also have company provided doctors, and that any occupation will state that if their company provided doctor states that you are capable of working in any right, any sort of capacity, whether it be working at a call center or a greeter at Walmart, regardless of what you did previous to your injury or illness, if you carry an any occupation definition, a lot of programs will help with re-education, retraining, getting you back into the workforce. But if you can work at all, then it's not going to pay you. Regular occupation is my favorite, which states that if you cannot do a job that you are trained to do, you are deemed disabled. So that way you're not having to go and start a new career and a new venture that maybe you're not interested in because otherwise your disability benefits are going to get cut off. So asking own occupation, any or regular, from what I know of those of you here that I know, you don't need own. It is quite expensive, but for those that are, carrying a DR in front of their name, own occupation makes sense. The rest would be quite comfortable with a regular occupation. Canadian owned. So Canada, any insurance company that is Canadian underwritten has to pay into a program called Assurance. Assurance is insurance for insurance companies. So in the case of an underwriter falling upon any financial hardship, Assurance will back them up. So all Canadian companies have to pay into it, whereas American and European companies don't. So in the theme of support local, have a look and find out who's underwriting your policy. And if you can, get a Canadian underwriter. It'll dually back you and it'll keep the dollars in the country. Definition of disability. So they very, very much vary. So some policies, the strongest policies in the country will state that the definition of disability is that you cannot perform one of your regular duties. All the way down to definition of disability is that you cannot dress yourself, feed yourself, transfer yourself from the bed to the chair, be continent. So the definition of disability, so the question you want to ask is what deems me disabled? That is the question. Based on my policy, what deems me as disabled? Obviously, not being able to perform one of your regular duties versus your daily acts of living, one is stronger than the other. Life insurance. So I have not done the ridiculous amount of reading for my life policies or my life license. So I am going to hand this over to Matt.
Oh, you're not even kidding on the amount of work you need to do to get this license.
I don't even think I'm ever going to do it. Not going to lie.
Fair enough. So yeah, as a business owner, obviously life insurance is integral to the continuity of our legacy as business owners and to our family. So there are plenty of options for life insurance. We know term insurance, whole life insurance, and universal life insurance are generally the top three. Term insurance, you buy a certain amount of term, usually anywhere from 5 to 50 years. Whole life or universal life, good for the entire, basically good until you are. Questions usually arise of how much do I need? That can depend on what your debt load is, what your income is. Any insurance professional will do a full needs analysis with you to help you determine how much coverage do I need as not only a business owner to make sure that my business keeps afloat, or to buy out a partner if something happens, but also to make sure that your family is taken care of should you buy it on the personal side as well. And there's other options, kind of to piggyback off of what Amanda was talking about, is you do have some disability components that you can add to your life insurance, such as a waiver of premium. So if you do become disabled, the insurance company will waive any of the premiums paid that you would pay towards the life insurance until you're able to be deemed fit to go back to work. Amanda also touched a little bit on critical illness and how that works. So you have corporate critical illness versus personal critical illness. So for corporate critical illness is coverage that you can purchase through the corporation that you can place on yourself being the business owner, or also on any key people such as executives that are essential to running your day-to-day operation. So if a claim is made, funds are paid to the business to help keep things running, or to hire somebody to replace that key person until they're fit to go back to work. Premiums can be tax deductible. Talk to your accountant on this one. And you also have the option, as Amanda mentioned, with return of premium, that if no claim is made, you can get all your money back, which you get paid regardless. So it's pretty good that way. The other thing you would want to have a life insurance policy for is a buy-sell agreement. So if there's more than one owner, you can put a policy in place so that one thing happens to one of the business owners, the other business owner can buy the share and essentially remain in control of the business. This should be part of any partnership agreement, corporation, anything where there's more than one owner. Again, consult your accountant to determine the fair value of how much coverage you should have based on revenues and projections. We also can talk about employee benefits and having personal benefits as well. Having an employee benefit plan helps attract and retain top talent to your business, boosts employee morale, obviously have the health of the employees at top of mind, and have happy employees. And a happy employee is often a productive employee. And it can help your employees protect against large medical expenses occurred because of an illness or an injury, to help pay for medications, professional health care, and also travel insurance can also be included. While benefits can be expensive, there are many non-traditional markets that can allow an employer to have a little bit more cost control over the cost of their benefits versus a traditional company that you can see some pretty significant increases in your renewal premiums as your plan is being used. So what sets one benefit provider apart from the other is your renewals, essentially, as I mentioned. So what happens is, as you use your plan, the cost to the insurance company goes up, which is then going to be reflected to you as the business owner on your renewals. You have non-traditional carriers, which what they look at is they pool the risk across the entire company, helping to mitigate costs and keep those renewals in check to help keep the plan affordable and to keep your employees happy.
Okay, so is this me? All right, yep. Homework. You're not coming and talking to Matt and I without some homework. You got to ask the questions. So me personally, as a parent and a business owner, and of course, a licensed insurance agent, my goal is no gaps and no overlaps. It's not a fun topic, and it can be overfacing, and there's a lot of questions. So my First point of homework for you, call your providers and review your policies. I am going to set the date for you that by January 1st, you have at least contacted your advisor and booked an appointment. I realize that Christmas is coming. It's going to get busy. Business owners are the busiest people in the country. There will not be a convenient time to do this. And I realize that you already likely went through this once, got the things in place. You felt really good about it, but now you have some additional questions to ask of your policy. So that way, come claim time, there's no surprises. So by January 1st, book an appointment with your advisor to ask the list of questions that we've left you with today. No gaps, no overlaps is the goal, because again, that integration, if you're paying into two companies that do the exact same thing, they're going to fight with one another at claim time. So you're only dropping your money in a pot you don't need to. Imagine at claim time now and proactively make the changes necessary. Scenarios are a great way to ask questions. So I realize terms and definitions can get a little complicated, but think scenarios. What if? What if? What if? There's nothing wrong with asking those what if scenario questions to be able to learn what you need to learn. Ask as many questions as you need to understand the terms and definitions you're looking at. If your advisor is not taking the time to answer these, I'd be very, very surprised. A lot of us share in that we truly want to educate our clients and have you understand what you have or subsequently don't have. And then congratulations, you have all learned more about the most boring part of being a business owner besides bookkeeping, because I feel insurance is at least a little bit more fun than bookkeeping. So again, I'm Amanda Dunklin of Landmark Canada. I thank my partner in crime, Matthew Ball, managing partner of Billiard Insurance Group, for taking the time. We do, travel around offering this information to business owners because we care. So our emails are there. You can find us online. We're happy to help answer any questions that you might have. And of course, as insurance agents, we hope you never, ever need it. You die perfectly healthy. But if you need it, we want to make sure what you have is going to do what you expect it to do. So with that, I will throw it back to the host.